Right, so in this video, I'm going to discuss how to handle sales tax in the bookkeeping process. So it kind of goes out of the main focus of the course, but it's definitely something that needs to be discussed. So if you went through my Zero Setup course, I mentioned a couple of major tools that are really helpful. One of those being taxjar.com and the other being taxify.co. And those are two really good tools. And the thing that I told you was that it was probably best not to integrate those, even if they could, because of how the integration works. It doesn't quite jive with how the A2X accounting plugin works, and there's some overlap from both of those tools. So it was best to let A2X be integrated like I mentioned, and then leave the sales tax integration off. And so I'm going to just walk you real quick through what that process will look like. So what I have is a fake Amazon invoice pulled up, and what you'll see when you create your own account and set up A2X accounting is that when A2X brings over Amazon invoices, one of the lines you're going to see is sales tax. And so let's assume you've already registered in several states and you've elected to collect sales tax through Seller Central. Well, then in your biweekly payouts, Amazon is going to disperse to you the sales tax that they collected on your behalf. So you're going to actually see that when you have the A2X accounting plugin, and one of the line items will be sales tax, and I'll show you for this 2-week period you collected $100 of sales tax. And when you do, it should be coded to a sales tax account. And so there's going to be a $100 balance in this account. Well, so we're going to leave this as is. The A2X accounting tool is working great. But what happens is you're going to make payments to the state for the sales tax you collected. So you're going to use TaxJar or Taxify to remit a payment to the states for the sales tax you collected. And what I find is oftentimes the amount that you collect and the amount that you send to the state will almost never perfectly match up. So let's take a real life example. So I'm going to the dashboard. I've clicked to reconcile 17 items. And here we see that the first two line items are payments to two respective states for sales tax. So you might see the state of Virginia and you paid out $35. These are all, of course, example amounts. And you see California, the BOEE file, you paid $79. And so what my recommendation to do is to go ahead and code these directly. You might call this the state of Virginia, and then we're going to code this to that same sales tax account as the Amazon invoices. And then we'll do the same thing here, state of California, and we'll go sales tax, and we'll reconcile those items. And so now we've plugged these to the same sales tax account. What we're going to do is go over to reports, then to all reports, and you're going to see this second report in the detail report section is account transactions. We'll click on that. Once we run this account transactions report, we're going to have to first choose what account we want to run this on. So we'll choose sales tax, and I'll just pick a date that I know is going to capture all the transactions. Click update. And here you see our 3 transactions. So we see the first 2 ones are payments made to the states, which are debits. And then we see under the credit column from that Amazon invoice, we see $100 in credit. So in this case, which is very common, it looks like we paid out more sales tax than we actually collected, which it's pretty common, I find, to undercollect, especially when you're just getting started. So in the case where you undercollected, what we're going to end up doing is probably at the year end, what I recommend you do is if there's a balance under the debit column, then what you need to do is go into and create a manual journal, and you'll create a new journal, and let's say you had sales tax adjustment. We'll make this for the end of the year, and what we're going to end up doing is we're going to create kind of a new account, and this account will be an expense account. Just pick any code, and the name is going to be sales tax expense. So I'm doing this for example's sake. You should already have a sales tax expense account. And so what we'll do here is we'll do $14 of sales tax expense, and then we'll do $14 in the credit column to balance out that other account. We'll do $14 to the sales tax. So you debit sales tax expense and you credit the sales tax account. And what we'll do, that'll clear out the $14 of balance and it'll put in an expense. So essentially what's happening is, since we under collected, we're going to have to take, what we did is we took 14 of our own dollars and we contributed that towards sales tax, so it becomes an expense on our end. So once we post this, I'm actually going to post this so that's in the same month. We'll post this at 9:30. And once that journal posts, what we'll do is we'll come back over to the sales tax transactions report. I'll hit refresh. And voila, you see there that the state of Virginia, those two, and then we have our sales tax adjustment of $14, and then the sales tax we collect of $100. And so you see this account balances out perfectly. So the big idea here is you want the Amazon invoices coming to this account. You're going to pay off each state to this account, and then the balance that is left over, we'll go ahead and make an adjustment every now and then to sales tax expense. You do that via manual journal. So anyways, that's how I recommend you handle sales tax. And if you have any more questions, feel free to reach out further down the line for support, or if we start working